Right, ready to dive in. Today we're looking at Indian investment opportunities.
Yeah.
Specifically, this kind of blended approach that we've been seeing, kind of a buzzword floating around. So, mixing those listed equities with the private market.
Ooh. Yeah, I think what's really interesting is just looking at the Indian economic landscape right now. It's, beyond just growing. There's some major transformative forces happening.
Okay, I like that. So give me an example. What's really driving this?
I think three things: global offshoring, rapid digitization, and then this massive energy transition that's happening.
Okay, those are some pretty big buzzwords, exciting topics. But let's, for someone who is looking at India as a potential investment opportunity,
right?
What do those actually mean? Let's bring it down to earth a little bit.
Okay, so let's take offshoring for example. You've got a massive influx of multinational companies that are coming in and setting up shop in India. And what that does is it creates this ripple effect across industries.
Right.
And it drives up demand for skilled labor. We're potentially talking about, millions of new jobs by 2030.
So it's not just a theory, it's actually translating into real economic benefits.
Real tangible benefits. And that ties directly into digitization.
Okay.
India's tech sector is exploding.
Yeah.
You've got e-commerce, fintech, digital payments. All of these are just experiencing explosive growth, and it's only going to accelerate.
That is a lot to digest. And I think before we get too carried away, we also have to acknowledge this other piece of the puzzle,
right?
Which are those private markets.
Yeah.
And I think even for those who've been investing for a while, it feels like the private markets are this mystery, this unknown.
Absolutely, but here's where things get really interesting. If you look at, let's say, between 2018 and 2023, the number of private company exits in India has practically doubled.
Wow.
And you've got over 1,300 unlisted companies that are generating significant earnings. So that signals this massive untapped pool of investment opportunities.
Yeah. So huge potential there.
Absolutely.
But, how do you even begin to kind of navigate that world?
Right.
What makes it so different from, let's say, just investing in, the stock market?
So private market investing has some unique challenges. Mm-hmm. Access is often limited, valuations are more complex, and then liquidity. Yeah. And, the ability to easily buy or sell can be quite restricted. It's not as simple as, clicking a button on your trading app.
So it sounds like higher potential returns, but also with higher complexity and risk.
More risk involved, for sure.
Okay, so how does this blended approach, which we talked about a little bit at the beginning,
right?
How does that help to kind of, smooth out those bumps in the road?
So imagine a portfolio that strategically combines the stability and accessibility of listed equities with the growth potential of those unlisted companies.
Okay.
That's really the essence of a blended approach.
So it's kind of like diversifying, but across different types of markets.
Exactly.
Spreading the risk, and then you're also able to tap into multiple growth engines.
Exactly. It's about creating this portfolio that balances that stability with that potential for that explosive growth. And this brings us to, the 361 Equity Opportunity Fund, Series 4, which is a prime example of this strategy in action.
So let's talk specifics. How does this particular fund?
Yeah.
What's their secret sauce? How does it work?
So they're aiming for a 70% allocation to listed equities, and they leverage something called the SCDV framework, which stands for secular, cyclical, defensive, and value traps.
Okay, break that down for me. What does that actually mean?
So think of it as a way to categorize companies based on, their market behavior and their underlying drivers. So, for example, you've got secular companies, which benefit from those long-term trends we talked about, like offshoring or digitization.
Got it.
So they're the ones riding the wave of these powerful forces.
So they're looking for companies that aren't just, momentarily popular, but they're really positioned to thrive in the long run.
Exactly. And then you've got cyclical companies whose fortunes kind of ebb and flow with the broader economic cycles. Defensives are the stalwarts. They kind of weather those market storms.
Yeah.
And then value traps are those seemingly cheap companies that might be masking deeper problems.
So it's about being strategic, not just chasing what's hot at the moment.
Right.
Really looking for companies that have a solid foundation, the right growth drivers, and then a management team that can execute on that vision.
Absolutely. Now, on the private equity side, they allocate up to 30%, focusing specifically on late-stage companies that are nearing their IPOs. And this approach offers, a shorter path to liquidity.
Right.
So it mitigates some of those risk factors we talked about earlier.
So it's not just about picking winners, it's also about understanding that timing.
Exactly.
And anticipating those key inflection points.
Yeah.
But how do they go about actually valuing these private companies?
Yeah.
Especially when there isn't, readily available public market data to rely on.
So it's a combination of financial analysis, market research, and good old-fashioned human judgment. So they're not just crunching numbers.
Right.
They're digging deep into the company's business model. They're scrutinizing the leadership team's experience and evaluating their ability to execute. Okay,
so they're definitely doing their homework, but it still feels a little bit like a black box.
Right.
Tell me a little bit more about that due diligence process. What are they looking for beyond just the numbers?
They're looking at, a company's ability to generate sustainable profits.
Okay.
Can they scale without sacrificing their margins? Is there a clear path to profitability? They're also looking at, the competitive landscape.
Yeah.
Is this company truly differentiated? Do they have a sustainable advantage?
Okay.
And of course, they're scrutinizing that leadership team.
Right.
Are they experienced? Are they passionate?
Yeah.
And are they aligned with the company's vision?
Okay, it sounds like they're leaving no stone unturned.
Exactly.
But let's say they've identified a promising opportunity, they've done all their due diligence, they're ready to invest. How do they go about actually building a portfolio in this private market space?
So they follow a very systematic process that starts with what's called deal origination. So they actively seek out investment targets through their network, attending industry events, conducting their own research.
So they're not just passively waiting for deals to come to them.
Right.
They're very proactive.
Exactly. And then comes, the rigorous screening and due diligence phase, where they apply their evaluation criteria to, really narrow down that pool of potential investments.
Yeah. So it's like a funnel. Filtering out all the noise.
Yes.
And really honing in on those high potential companies that fit their thesis, their investment thesis.
Exactly. And then once they've identified the right opportunity, then they move on to, deal execution and closing, negotiating terms and finalizing all the legal and financial details. But they're also, even at this point, thinking ahead.
Okay.
They're crafting an exit strategy.
That makes sense.
Yeah.
So it's not just about getting in; it's about understanding how to get out as well.
When to get out, maximizing those returns for their investors.
Yeah. Exactly.
But I think let's shift gears a little bit and talk about the people behind the strategy. So what can you tell us about the 361 leadership team?
So they've got a stellar team, a blend of seasoned professionals who have, deep experience in both public and private markets. So you've got Anup Maheshwari.
Right.
He's the co-founder and CIO. He's got over 28 years of investment experience, including a very prominent role at DSP BlackRock.
So he's a veteran of the Indian market.
Yes.
Which seems invaluable when you're trying to, navigate all its complexities. But what about their private equity expertise?
Right. So that would be Samir Nath.
Okay.
He is the CIO and head of venture capital and private equity. He's got over 25 years of experience across private equity, M&A, capital markets, and even entrepreneurship.
Wow.
Yeah, he's held some key positions at Citigroup and Iron Pillar. So.
Okay, so they've got the public and private market expertise covered.
Yeah, which is a pretty powerful combination. But beyond the individual credentials.
Right.
What about their overall investment philosophy? What are those guiding principles?
So they believe in, the power of fundamental analysis. They don't chase fads or get swayed by hype. They dig deep. They understand the businesses that they're investing in, and they assess their long-term growth potential.
Okay.
They're also patient investors. They're willing to hold on to companies for years, allowing them to grow and mature.
And that's refreshing to hear in a world that's so obsessed with, short-term gains,
absolutely,
instant gratification. So they're not afraid to go against the grain, to bet on companies that might be, undervalued or overlooked.
Right.
They're looking for those hidden gems.
Yes.
With the potential to become future giants.
Exactly. But they're also realistic. They understand that not every investment's going to be a home run. They're prepared to cut their losses if things don't go as planned. So they're constantly monitoring their portfolio.
Yeah.
They're adjusting their strategy, and they're making sure they're positioned for long-term success.
So it sounds like a very disciplined, data-driven approach.
Yeah.
They're balancing that optimism with pragmatism,
conviction,
with willingness to adapt.
Yeah.
But they're not just focused on maximizing returns, are they? They're also considering the impact that their investments have on society.
Exactly. They're looking for companies that are not only profitable but also contributing to a better future for India.
Okay. So it's not just about chasing profits, it's about making a positive impact as well. But when it comes to their portfolio, are there any specific sectors or industries that they're targeting? Are they playing in all areas of the Indian market, or do they have a particular focus?
So they have a broad investment mandate, but they are especially drawn to sectors that are experiencing this rapid transformation. So think, technology, healthcare, renewable energy, consumer goods, and financial services. They're tapping into those mega trends that we discussed earlier.
Yeah.
And they're aiming to capture that growth potential of a rapidly evolving India.
It makes sense to align your investments with those larger forces
that
are shaping the economy.
Yeah.
I think maybe this is a good place to pause for a moment.
Yeah, I think so.
We've covered a lot of ground already.
Yeah, we have.
We'll pick up this conversation in part 2.
Sounds great.
We'll explore more about 361 and their specific strategies. Stay tuned.